The Chinese economy has been hit by another meteor. This time, it's a banking crisis that'll make you forget Silicon Valley troubles. People are unable to draw out their own money. Those working in financial services are threatened with a 75% pay cut. And it's all happening at the point that was supposed to be all about an economic recovery post-COVID. Let's look at it in detail. Financial crunch. The financial crisis in China is only getting worse. It represents merely a new development in the rapidly spreading crisis that started when the enormous real estate developer, Evergrande, declared that it could no longer support its roughly $300 billion in liabilities. Beijing exhibited a glaring lack of understanding at the time, as evidenced by its refusal to act swiftly enough to stop the nosedive into disasters that have since come to characterize the Chinese economy. What is happening in China is a textbook example of how a financial crisis develops. Problems in one area causing problems in others, and the resulting anxieties and lack of confidence prevent the system from working efficiently or fostering any kind of economic growth. When Chinese borrowers threatened to stop making mortgage payments because they were concerned that these developers would never finish the projects they had been contracted to work on, this mistrust of others spread to Chinese mortgage lenders. This threat caused Chinese depositors to worry about the security of their money because the majority of banks were implicated. And this worry only grew more intense when the Bank of China unilaterally prohibited withdrawals. The financial issues have had obvious economic repercussions too. Many attribute the country's economic woes to Beijing's strict quarantines and lockdowns in response to COVID outbreaks. However, the financial crisis has also had a huge impact, which is being downplayed by Beijing and the media. Frozen accounts. Every saver's worst fear came true as a cash crisis developed at 4 rural banks in the Henan province of central China. Since last April, deposits at the Yuzhou Jian Minsheng Village Bank, the Shanghai Humin County Bank, the Zhejiang Huanghuai Community Bank, and the New Oriental Country Bank of Kaifeng have been frozen, resulting in a number of demonstrations in the provincial capital of Zhengzhou. Online images and videos of demonstrators holding signs reading "Return Our Money" in front of the Henan branch of the China Banking Insurance Regulatory Commission in Zhengzhou have been spreading, while some rural banks in Henan have frozen accounts and Baoshang Bank declared bankruptcy. Clients protested about their concerns for their savings. But according to Chinese authorities, the concerns with those institutions are only regional. They further emphasized that although the operations and structure of certain Chinese banks were up and down, they did not present systemic threats to the overall economy. Talk about being in denial. You see, the 5 big banks of China, which are among the biggest in the world, are owned by the government. So of course, admitting their failure would mean admitting Xi's failure. The amount of money that has been frozen has not been verified by Chinese regulators either, but depositors who have organized groups on various social media platforms to voice their complaints claim it is in the tens of billions of yuan. The demonstrations and distress among savers at China's tiny rural banks happen just as the risk of a global recession are increasing. The country's rural banks, which frequently serve as the primary lenders to small enterprises and farmers in less developed areas, are thought to be more susceptible to economic downturns. Hundreds and thousands of clients of the 4 banks, whose balances ranged from 200,000 yuan to more than 1.5 million yuan, reported that they were unable to withdraw money from their accounts either online or in person. As a result, Beijing is now concerned about a systemic financial collapse along with a huge economic and social repercussion. The People's Bank of China released a statement saying that they've launched investigations into the 4 banks and that the central bank will cooperate with relevant departments to protect the legitimate rights and interests of financial consumers in accordance with the law. But a year on, many people are still on the streets begging for their money to be returned. Even though deposits in both domestic and foreign currencies maintained by banks in China are guaranteed up to 500,000 yuan per depositor per bank for both enterprises and individuals, people haven't seen any insured money come back to them either. In a video that was making rounds on social media, Yang Huajun, the deputy director of CBIRC's Henan branch, assured demonstrators that legal deposits, including those from outside platforms, would be safe. However, when demonstrators pressured Yang for an answer, he was unable to define what legal meant. Small Chinese banks have been targeted quite frequently in recent years, and several of them have been charged with financial fraud or corruption. Truth is, experts fear that a bigger economic crisis is on the horizon, as if the real estate catastrophe and mounting bad debts associated with the COVID-19 pandemic weren't enough. The life savings of as many as 400,000 people in China have been snatched from them, with no assurance that it'll ever be returned. This is a drop in the huge ocean of China's banking system, but roughly 4,000 tiny lenders own about 25% of the industry's total assets. According to analysts, these small lenders frequently have ambiguous ownership and governance structures, so are more susceptible to corruption and the economic downturns. The magnitude of bank scandals where employees take money from depositors and embezzle it is disturbing for sure, but what has been revealed is merely the tip of the iceberg. Bank runs occur more frequently and on a bigger scale as the Chinese economy continues to sputter, the fiscal crisis worsens, and Chinese businesses, particularly those in the real estate industry, are forced to repay loans. But where from? Nobody knows. More riots and chaos. People are at their limit. Hundreds of protesters flocked to Zhengzhou, the capital of Henan, in an unsuccessful attempt to protest outside the headquarters of the banking regulator and demand their money be returned. A few months later, there was another demonstration planned, but get this, the depositors were shocked to see that the health codes, which were green when they left, had changed to red when they arrived in Zhengzhou. So anyone with a red code, which is given to those with COVID, is prohibited from using any public transportation or spaces, and the government quarantines them for weeks. As a result, they were quickly whisked away by authorities. Analysts aren't concerned about a financial crisis as much as they're worried about the unrest that the bank runs have caused. After the red code scene, there was a huge outcry on social media, concerns about how the government was binding people digitally and preventing them from using their right to protest. Police also allegedly attacked dozens of people in an effort to scare them from demonstrating, and yet the citizens stand tall. A year on, hundreds of people keep protesting to demand the return of their funds, while donning surgical masks to hide their faces. They are among the thousands of depositors in China who are still fighting for compensation after having their accounts blocked. Interestingly, they cite the prompt action taken by US regulators to rebuild customer confidence in the banking system by ensuring that depositors of Silicon Valley Bank and Signature Bank, two failing institutions, would have access to all their money. Sadly, their government and regulators only gave them a cold shoulder. In what is now referred to as a Ponzi-like scheme, the four rural banks had assured consumers of substantial returns. They used a portion of the money that was illegally accessed, which had an annual rate of return of 13 to 18%, as bait to lure funds in addition to the regular deposit interest. But as the economy weakened and borrowers found it harder to pay back the banks, it became more challenging for them to provide the rates they promised savers. And instead of owning up, they locked people out of their own accounts. It's worth noting that at a time when public support for China's financial sector was already dwindling, is when this banking crisis struck. The government's probe into the Henan bank run is being eagerly watched by investors and citizens alike. And it could be the difference between stability or a full-blown civil war. Let us know in the comments what you think about the Chinese banking crisis. We'll see you in the next video.